World Economic Forum on East Asia in Naypyidaw, Myanmar, our program Myanmar Focus Daily has an opportunity to speak with a senior partner of Mckensey&Company on the factors that could drive and deter the growth of Myanmar after the company has recently launched a report stating that Myanmar's economy could quadruple by the year of 2030. The question is whether this projection is overestimated or not.
We believe that Myanmar could quadruple its economy and reach roughly $200 billion by 2030. This is a trajectory that other countries have followed in the past. For example, Thailand between 82 and 96 have gone through the same quadrupling of its GDP per capita. Same way, Indonesia between 88 and 2002. So this is not something that is impossible. Some other countries have done that already.
What are the factors that could drive the growth for Myanmar?
Myanmar has first to diversify its economic base. Today, the country's economy is very much focused on agriculture and energy and mining. In the future, in order to reach that potential, we believe that Myanmar could get into manufacturing much more dynamically, as well as infrastructure and services such as banking, telecom, consumer services, and of course, tourism. We think that manufacturing will help to create at least 6 million jobs. It will account for 1/3 of the economy by 2030. Likewise, tourism can account for $14 billion of revenue and have 2.5 million people working in the sector.
What about the factors that could deter the growth?
The country today is a quite small economy, as you know, right? And it is coming out of several decades of isolation. There's a number of challenges that the country is facing: political stability, the need for putting in place the right regulation, the need to enhance the skills level. Also, the fact that the country needs so much infrastructure, basic infrastructure such as electricity and telecoms and road. So there's a number of things that the country has to put in place before considering moving into that growth trajectory. However, we think that Myanmar is not different from other emerging markets. Any investor looking at Myanmar would apply the same criteria as it applies in other emerging markets.
Can the exact same method be applied, or is there any different than other emerging markets?
The main difference, I guess, is that Myanmar today has to address a triple challenge: putting in place a stable political situation, ensuring that there's a peaceful context in the country, and opening up its economy to attract foreign investors, put in place best practices, and of course grow the economy. So those are three big challenges that have to be addressed at the same time in parallel. So that is an uneasy challenge. The main obstacle could potentially be the lack of resource. Today, Myanmar does not have enough skillful people. The average schooling year, according to UNDP, is 4 years. It's not a lot. But in big cities like Yangon, there are many more skillful people. So there's a number of resources that Myanmar could build on in order to go on this quite dynamic growth trajectory.
The challenges that you mentioned that they should be solved in parallel, how should Myanmar prioritize to solve those challenges?
We believe that Myanmar can develop quickly a blueprint, meaning a set of actions that the country leaders, government, but also business leaders could take in order to put in place the platform for growth. As I said, basic infrastructure, regulation, launching a massive vocational and training program to sustain the credibility with foreign investors. Foreign international community, the international community is very much supportive to Myanmar today. So Myanmar should really leverage that, turn that into an opportunity to grow.
In the next episode of Myanmar Focus Daily, we will take a look at how Mckensey sees the future of Myanmar and whether the company thinks that Myanmar could become Asia's next tiger.